Hello and welcome to the Breakthrough Real Estate Investing Podcast. We put this show together to inspire you and help you break through to the life that you want to live through the power of real estate investing. My name is Rob Brake, and here with me again, as always, is Sandy McKay.
Hey, Rob, how you doing today?
Very good. How you guys doing?
Good. How are you,
sorry.
Robbie?
Oh, we're both
I'm
Rob.
good. My apologies.
Both Rob, yeah. I forgot
I'll go by
about
Bob today. It's good.
We're going to call you Robbie.
Perfect.
Rob,
there we go.
Let's do a little intro then, Sandy. How's that sound?
Sure. Yeah, we've got Robby Clark standing by here, coming on the show, about to be a guest. Well, welcome to the show for now. We'll do a proper intro in just a few minutes, but happy to have him on, and he's standing by waiting, so we'll get to him in just a minute or two.
So first of all, people should go to our website, breakthroughreipodcast.ca. There they can download our free gift. What's that called, Sandy?
The ultimate strategy for building wealth through real estate. So they can pick that up and also get on our email list. Listen to every show. We'll notify you when the new shows come out. Get invites to all of our events. Listen and hear about what we're up to. So going over and jump on that list and get the free report and everything else that comes with it.
As well, please go over to iTunes and subscribe to the show there. We have 257 reviews on iTunes, or ratings, I guess, on iTunes. Not that many reviews. I think we have 135 reviews. Most of them are 5 stars, and we've got a couple of new ones here, Sandy. So I was just going to go through those. The first one is from, sorry, I'm a bit raspy here. I got a little bit of a cold. It's driving me bonkers, but I'll get through it. Steve from Calgary says, 5 stars. Hey, fellas, I've been listening to your podcast for the past year, many of which I have listened to multiple times. I am a veterinarian in Calgary, Alberta, with a side passion for real estate. My wife and I are planning to house hack into a new primary residence next year and use the BRRR strategy to duplex the house with the ultimate goal to rent both units and then repeat. Calgary is a bit of a different market, so I would love to hear more interviews with Calgary-focused investors if that's possible. If you know anybody or if you're out there from Calgary, let us know and maybe we'll talk to you about it. Some questions I have specifically related to likelihood of getting approved from the city to have a property rezoned, finding accurate comparables when you refinance, and big red flags that make the property difficult to suite, etc. Keep up the good work. I'm inspired after each and every show. I'm going to speak on that right now. Thanks, Steve. I appreciate that review that you've sent us. But I think the biggest thing is finding the right property. So an investor-focused agent in that area will be able to get you into the right one. So they'll know all the red flags. They'll know about getting approval from the city to have that second suite added in there, and they'll of course be able to pick the right type of house for you to be able to, I guess with the greatest ease add that second suite. So I'd say that's probably your first order of business, is just do a little bit of research. See who's specializing in that kind of property out in Calgary and get in touch with them. Sound good?
I think that's pretty accurate. I think maybe we'll even touch on that on the show here today. But yeah, it's every area is going to be different, right? Every town, city is going to be different on that. Get your power in, and we got to get the right people in your corner that can help you find the answer.
Again, I wish I could speak on it, but every single municipality out here has completely different rules and regulations of what they want to see. So I wouldn't even begin to understand what they're looking for in Calgary. So that's why it's important to find someone who's, focused in that area. Mm-hmm. The other thing is, okay, we have one more. So this one says, amazing podcast by Free85. This person says, I just started listening to your podcast and I'm loving getting educated about real estate investing. My husband and I are very interested in starting in this, and I'm excited to listen to your podcast to learn. Love that you have different guests, and I love hearing their stories and how they were able to get into it. So thank you very much for those reviews. Appreciate those. And just touching back on the last one, I remember what I was going to say now is if you're going to look into the BRRR strategy or BFRR or whatever you want to call it, buy, fix, refi, and rent, we just did a 2-episode special covering everything, right, Sandy?
Yeah, it was awesome. So those are the last couple episodes. So we're kind of past that. We're probably going to touch on a little bit of that here in our interview today. But I think those were really great if people want to go back and review those and listen in. And I think we didn't really touch on what the guests were talking about there or what the reviews were talking about as far as zoning and whatnot, but we definitely dove into renovations and how to pick the right property and all sorts of good stuff there.
I mean, it boils down to power team, I think, really was the bottom line.
Yeah.
Okay, let's move on. Sandy, anything that you wanted to touch on?
I don't think so. I think there's lots going on, and I think we've got a great guest here that we think that probably we could take up the whole episode with. So a lot of details I think we can get into with Robby coming up. So I think we should probably dive into it, unless you got something to throw in there, Rob.
It sounds good to me.
Awesome. Well, we do have Robby Clark here on the show today, and Robby, I'll give a brief intro and then we'll dive into it with him. Robby's actually one of Dylan Suitor's business partner. Dylan was on our show here, episode 95, and we talked with Dylan a lot about what he does, and Robby's kind of a different piece to that puzzle of what they do. So they have huge goals. Robby's approaching 200 plus units in his property. Is focused mainly on residential multifamily properties. Robby actually grew up in the film industry as a child actor. He's on a bunch of shows, movies, and all sorts of stuff there. He eventually transitioned into entrepreneurship, bought his first rental property 7 years ago now. He's built multiple businesses since, including eFresh Meals, which is the meal service that serves all of Ontario. It's got Lawn Care Alert, which is a landscaping company primarily around the Golden Horseshoe, so Southern Ontario. And now he's focusing almost all of his time in the real estate field and buying properties, fixing them up, putting all that together. So we'll dive a lot more into that in the show here, but welcome to the show, Robby.
Thank you very much. How you doing, guys?
Great. Thanks for coming on. Appreciate it.
Thank you for having me.
You got an interesting history.
Yeah. I've danced around a little bit, so to speak, but yeah, that's, it's almost like different worlds now, but I grew up in one industry and then, obviously dived into entrepreneurialism about 7 years ago with the intent of really focusing on real estate as well too. But managed to start a couple other businesses, one with my younger brother in the landscaping field, and then one in the meal prep industry as well too.
And we all know there's no money to be made in the film industry. So
yeah, not in Canada. No, it's, it's good. I got a lot of buddies who are still very active, but it is a constant grind. And if you're not mentally focused, like any industry, anything you're going to do, the mentality of it means so much. And if you're not 110% in, then you're out. And, unfortunately in acting as well too, you're always going from job to job. So you could be at the top one day and doing a lot. And if you lose that focus, I mean, there's other people there ready to eat it up. So, it's the same goes for everything, but there's definitely less, I want to say security, if you will, because you're still, it's still a job. You're still an employee, and you unless you're producing, you're fighting for every job that you go for.
Well, let's go back and talk a little bit about your history then, just to get a perspective on that and how you transitioned into real estate from there.
Yeah, absolutely. I think growing up in the film industry, I think it actually helped quite a bit in terms of goal setting, no matter what it was I wanted to do. I always set high goals for myself and was around, I didn't go to school too much. I had a tutor on set, of course, legally, but you don't get much time in there for that. And I was, distracted with everything else I was doing. But one thing it did allow me, I've had the benefit of working with a lot of great people: Charlie Sheen, Emilio Estevez, the Olsen twins, Will Ferrell, and just a number of sorry if I lost you guys there for a second. A number of big name actors and producers, Woody Harrelson. Just a lot of great people who really set their goals high, and you really get to see their perspective and understand that people are just people. And I knew that at a very young age. And as long as you set your mind to something and you set your goals somewhere, that you're going to get it. There's not much that can stop you. It's really about perseverance more than anything. And that kind of helped me out because I wound up moving to the States late teens and was more interested in, having fun than I was in working on my craft. And I'd made a lot of money for a Canadian actor, and then, didn't work for a while and spent all my money, and then basically had to start from scratch again. I went to, literally back to serving tables, which is, was a little hit for my pride, but there's nothing wrong with it. I obviously was able to do it, but I did realize, okay, what do I need to do to rebuild myself? What do I need to learn, since I don't have an education, to get a good job, if you will? And I kind of started my entrepreneurial learning at about 24, 25 years old. I'm 32 now. And then just powerhouse through every book I could read. Started with Rich Dad Poor Dad, Robert Kiyosaki, which I'm sure, you guys are very familiar with, and a lot of your viewers probably are as well too, which is kind of like a feel-good book. Anybody can do this kind of, I always recommend it's like an entry level for people to get into real estate, or really business in general, because it shows that anybody can do it. And you don't need crazy amounts of money to do things. You need the work ethic and kind of core values around it to get that started. And yeah, I made my first purchase 7 years ago on a small $127,000 home. That was a legal 2-unit at the time. And we did, minor repairs there, got a new tenant in that paid more. And then went from that to my second property, where I learned what tenants not to put in your homes and the pitfalls to avoid from there. And it's been I want to say accelerated but gradual learning curve on the different things that would help scale this business. Because I did always, even at the beginning, have a mentality of like, yeah, I know I'm buying $100,000 home, but I'm going to own 100. I'm going to own 200. I'm going to do that. And although I didn't know how to get there, I never changed the goal. I just changed the plan to get there, which is what you need to do in any business, especially in real estate, because you're not going to learn until you go through it. And that's really what it takes.
So that's interesting. Where was this first $100,000 property? Duplex?
St. Catharines.
Because even 7 years ago, that sounds like quite a deal.
It does. It was a small 2-unit, that's for sure. We had an ailing tenant in the upstairs, so we were able to find a good deal. That was even cheap for that area, those areas back then. There's been a bit of a market increase there. I like to think we've had a little bit to do with it in some of those areas, but there's one that was during the time before really capital appreciation really took off in really the GTA, not so much in the small suburbs I was working. But I was also always focused on cap rates. I wanted to be able to, what's a recession-proof model? I'd been through, like I went through bankruptcy at 22, so I was like, what do I got to do to, avoid that and make sure that things that you're buying are actually making money? Capital appreciation was always my last kind of goal there. Like I wanted, okay, how do you cash flow? How do you pay down equity so that you can retain these homes? And then you could build a model that worked in case, were to go higher. I don't believe we'll ever hit the interest rates just on a macro level that we did in the 80s with 18, 20% interest, because the system is not designed for that. There's too many pension plans to pay to give out those kind of interest rates now. So it's, but it was still built with that in mind. We have low interest rates now. If they go up, how can you sustain this? How can you build it? And I didn't know the answers like I do now, but it was always built like, you want to treat these homes, you want to improve the city, improve the value, and cash flow well, and get good tenants in there by doing it. I was looking to kick out all the slumlords, and I think we're doing a decent job right now, and we want to do a better job. So that's I started there because I could afford it at the end of the day. So that's a big one.
And did you have a plan I know you kind of said that you didn't, it was more just, I'm going to buy one, then I'm going to buy two. How did the plan form? When did the plan form?
I had ideas. I didn't really have any money. So I had a few partners on the first one and did a lot of the work. So I wound up buying them out on that one in the increased equity value, because the following year we wound up selling it for 160. I bought it at 127, then we sold it for 165. Had a good agent friend of mine who's still my agent, and we got reduced commissions on the sales so that we weren't losing a lot. Again, it was a small deal, and we were able to put 5% down at the time. I tell you, I really didn't have funds. And kind of grind it out there, just learning the ropes. I knew there was intrinsic value in these properties that are much cheaper to buy than you could build for. I mean, the lots now in St. Catharines are 150, 175,000 for a single family lot, right? So when you're getting these homes that are 250 or under, and you're able to either, well, now we work on conversions and things that are a little higher level, but if you're able to get them at that price and then fix them up and you look at the comparables that are higher and you can do it for less, well, you're good. And my thing on those cities, again, is like, we're in a beautiful place in Ontario and really Canada where our vacancy rates are so low, 2% almost across all of Ontario. This includes Sudbury where we are as well too. And our immigration policies are bringing in more people than we're building. So we don't have the issues in the States where you go to some places and there's 10, 15, 20% vacancy. We're in an amazing place to own rental properties because the vacancy rate is so low. So if you have an attractive rental property, it's really about you vetting the tenants correctly to bring them in. So I had ideas. I didn't have necessarily the action plans to get there. That took a few years to kind of come to fruition. And, I'm sure we'll get into it, but I tried a lot of different things with the construction company, from, hiring a bunch of GCs in-house, then doing a bunch of sub-trades, hiring electricians in-house, then doing sub-trades. So I went through a bunch of different learning curves and I failed forward, if you will, to figure out the different things that actually work and how to build a system for scale. Because passively investing is still great in those areas, because at the end of the day, if you're looking at labor and lumber, that's going to continue to go up. Just because a market didn't go up where there's 2% vacancy, well, that means people are missing it. And people are missing the boat on passive income in those areas. But when it comes to builders, they can't go there because it's too expensive for them to build. But that doesn't mean there's not a discount in your area. And this isn't Detroit, I mean, there's great areas in Detroit, but you're not collecting your rent with a gun. These are just underappreciated areas, if you will. And to me, if you look at it as a stock, they're undervalued areas, especially considering the low vacancy rates and the cap rate returns that you can get in these sub GTA markets, if you will.
So you mentioned St. Catharines and Sudbury. Are you in other markets besides those?
I am not. Like, I've done we did something in Waterdown, which actually didn't turn out that great. But those are my two areas of focus. I initially was looking at Hamilton, but those are my two areas of focus.
Well, you know what? That's good too. No, I was just curious, but I think it's good to focus, right? And just stick to the areas where one of the most important things you can do is be able to identify a deal when it shows up on your desk. So if you could stay focused on those two areas, as soon as something comes by, you're going to know right away whether it's something you're interested in or not.
Correct. And you get to know the areas, and if you're getting a few on one road or something, you can actually help increase the value there, and then eventually become your own comparables if you're doing it at a bit of scale. But it really is, like, most people in my situation, when they get there, I think a lot of investors I talk to immediately jump into larger properties after they've done a few. Correct. They're like, okay, now I want a 20, 30 unit building or a 50 or whatever they want to do. And there's nothing wrong with that whatsoever, but I've just been hell bent on achieving what I wanted to in that smaller sector. I like the turnaround time a lot better. And I think that gives me an advantage over jumping ship to something else too soon, which is in my nature to do. I've started a bunch of, little companies in the past and things like that. And I'm kind of all over the place. So I've forced myself to be consistent with what we're doing and just get better at what we're doing.
Maybe briefly take us through your real estate journey from bought the first one 7-ish years ago now. What are you at now with portfolio, and what are you buying and stuff day to day today?
Yeah, sure. So right now we're doing about 3 to 5 closes a month. I went from working independently by myself and purchasing and selling and having a small team. And as I was like hiring on like project manager, property manager, and I always did it a little prematurely because I would, we'd have 4 or 5 properties and I'm like, you know what, I don't want to rent these out. Let's bring on a property manager, because property management, some companies are good. I don't want to discredit it, but as an industry as a whole, it's not a great place, especially in the residential market, to make money. So it's tough to find people who are really good in that industry. And I think to manage your own assets at scale, like I would never recommend somebody get a property manager if they're doing this as a passive investment. It's just not going to be worth the cost. But for myself, it was very important because I wanted our assets to be managed properly. I wanted them to be rented quickly, and I wanted them shown every single day until they're rented to the right tenant. So for us, it worked. So it probably took a few years to kind of figure it out. Like I started going and buying still undervalued duplexes with a small team, and then going in with the focus to renovate them and then refinance the capital out. Now, of course, that means that you need to get your labor at a good cost and know what you're doing, and along with your materials as well too, so that you can kind of have a competitive advantage, if you will, because you're trying to look like those nice ones that are going for double the value yours are. So I had started continuing to buy duplexes, and at this time I wasn't doing any committee of adjustments or repurposing. It was, I don't recommend for someone's first home that they necessarily get into. I heard rezoning earlier. That's good to work with engineers on that who have done that before to give you the right advice. But it's a lot of work. So in our area, we stuck to R2 zoned areas that were already a legal duplex to start, and I would go in and I would spend, say, anywhere between $15,000 and $35,000 on a unit, and that's a bad unit. Say it's all knob and tube. You need new electrical, new plumbing, new floors, new kitchens, new bathrooms. We're even putting stainless steel appliances in there. And I was told by a lot of appraisers, like, what are you doing? You're never going to get your money out of here. And I'm like, listen, there's comparables that are not too far away from here that look good, and they're double the value. If you guys are telling me not to do any work here, then you want to live in a depressed environment forever. You need somebody to come in there and push the pendulum. And when I first started going and was selling some of these properties, I would find a lot of, Rockstar Real Estate, which is a great real estate company that looks for, passive income investments for their investors, or Toronto GTA buyers who would come in and look at these and go, wow, I didn't even know these properties existed in St. Catharines. Like, I'm interested in this. But if you did kind of the middle ground and just, kind of cheaped out on your renovations and things like that, well, then the people where you need to really bring the money sources in from, whether that's, starting with investors and then bringing in the builders, it needs to come out from where it is. And those are the guys in the GTA. So if you're not going to make it attractive to them and put in the work to do that, then you're not going to be able to attract that capital in the short, medium, and long run. So that was always kind of my thoughts. I didn't know if it was true, but I think it just looking with how things are, to me it was true, and it did work out that way. And then when we started completing some of our first homes, we were getting some of the appraisals we'd like. We were able to recapitalize the majority of our money back out. Now, I was trying to buy so much that I would have to sell for my overhead, because I had, like I said, project managers, site coordinators, GC. So me was not always about just a passive investment. I was really good at that, but it was how do I afford my infrastructure to build this at scale? So that was something that took a few years, and really over the past 12 months and even 2019, we've done a great job of changing things around in that regard. So I would say about 3.5 years ago, I started picking up the pace and purchasing more, and then did, maybe 5 or 8 deals that year. Then I went to 10 to 15 deals, then 20 deals. And then I think I've done 70 purchases this year. Now, my issue was, again, never really the purchasing and making that home profitable and cash flowing. Was for me, because I'm trying to do this at scale, was how do I afford the infrastructure? So the majority of my homes I wound up selling, and that would go to feeding my infrastructure. So they were profitable, but it went right back into feeding the system. So I was doing a better job of raising the value for the neighbors than I was of really accumulating wealth myself on that side. And again, if you're a passive investor and not looking to do that, and looking to buy 1, 3, 5, 10, even 20 homes over a long period of time, I wouldn't recommend, necessarily trying to build up the team I have. Like, we have a full-time in-house lawyer. We're going to start in-housing our transactions that way as well too. So there's a lot of things that we bring to this that is just simply built for scale. I treat it like a business, not like a passive investment. But there's a ton of ways to make money passively and do extremely well that don't. I don't want to say take the effort, but that don't take the effort that trying to grow it at scale would necessarily take. So that's been kind of the gist of it over that period of time.
So, I mean, amping it up like that is pretty intimidating, I'm sure. Was that strategy by design? Like, were you flipping these places, or did you just realize sort of as you were going, it's like, okay, we've built this machine that needs to be fed. So because of that, we're going to have to sell off some of these properties.
Correct. I was pretty bullheaded at times, and was like, no, I can do this myself. I have the model that works, and once I'm there at scale, I can afford my infrastructure through cash flows. Just naive is the correct way to put it from how I was doing it. So I always wanted to hold them all, but I would just run out of money. So I was forced to sell to pay for the infrastructure, which admittedly had a lot of fat on it for a couple of years as well too. Just different positions that were not needed, or positions not doing their roles and things like that. So that really hampers things, because if you have, full-time salaries and whatnot that are going out, it takes a lot to sell them. Real estate is supposed to be a slower game, a good return in over time. It's not supposed to be like, if you get equity, like the best way, if I'm selling a home 2-3 months after it's completed, well, I'm losing a third of the profit easily on that, between commissions and everything else. And then capital gains on top of that from what profit you have left over. So my intention was to always hold, but when doing it just by myself, it was, I don't want to say impossible, but I didn't have deep pockets. So it was very difficult to do that. And I had people for years being like, hey, can we invest with you? Can we do this? Can we do that? And I was always kind of like, I don't really need that. I can just kind of do this myself. And I had one JV who was good, and we went through a bunch of learning curves together, but I still had more properties on my end than his end. And then I hit some hiccups last year where I wasn't able to buy more homes. And I was like, you know what? And it was my network of friends who I really trusted, not even deep pocketed guys, but they could afford to buy 1 or 2 properties. And that's when I really got into it with them. And really 2019, I'll be honest, is when I started putting the pedal to the metal with the JVs. And because I'm not forced to sell them to pay for my infrastructure, because I don't have all my capital in those ones, it's allowed me to really, create some funnels with the contractors, with some vendor rebates on materials and different things like that, so I can afford my infrastructure and pay for my infrastructure without having to put all my capital into the projects and scale it that way. So the JVs, especially exclusively working with JVs, which I pretty much do now, I have 5 different partnerships. That was a newer thing. It probably made sense to do that from the get-go, but I don't think if I had the mistakes, whether it was, too many staff members, too much fat, or, different expectations. If I didn't go through those curves, I probably wouldn't be as dialed in. I definitely wouldn't be as dialed in as I am now with what works and what doesn't. So it seems like that, but I've got 6-7 years of practice in research. I probably read as many books as anybody on real estate in that period of time. And, except for maybe Ty Lopez. No, I'm just kidding. It's that's it. It was trial and error, and people are like, oh, you're doing this and that, but it's been a lot of work and a lot of ups and downs, like any kind of business is, and we're getting our footing in now for what works to do this the way that I envision, if you will.
So what's your focus now? What do you focus on day to day? And maybe we'll get into some of the systems and stuff you have that you still use. What do you do though, specifically day to day? What's your days consist of in this real estate business? Yeah.
So for me, it's a lot of everything, but I want to say operations. Like I'm responsible for speaking with, we obviously have site coordinator and project manager, but I do speak with the contractors still, because we have a really good network of sub-trades in the cities that we're in. I deal with all of the pretty much all the financing. Dylan's actually great and deals a lot of the financing on his end as well too. But for most of the JVs, I deal with all of the financing, the brokers, the buys, the acquisition. So I work with my agent on what capital will work. I work with the engineer to see if we can convert properties. So right now, a big thing that we're doing in St. Catharines market, I was buying a lot of triplexes, quadplexes, even like a 5-unit, 7-unit here and there on the commercial side that worked with the math. But a big thing in St. Catharines right now is purchasing single family homes and then converting them into an ancillary unit to convert them into legal 2-unit buildings. And one of the ways we're doing that now and finding the value, because the market has crept up a little bit there, is finding smaller single family homes, then getting a permit into the city to build out a larger single family home. And then from there, we're submitting a second permit to build an ancillary unit, which can only be about 40% can only be up to 40% of the main unit, in order to have a nice 2-unit that we got at a reasonable price. And our renovation costs, typically, and that's what you're always going for, it doesn't exceed 75%. Renovation and purchase doesn't exceed 75% of the after repair value. So it adds a lot of value into the city. You're basically taking these homes that have been neglected for X period of time, and just creating a lot more value there. And the one thing I love about what we do, again, is that, like, even though we are raising the prices of these homes, people are like, oh, it's not like Oakville where we're taking $1 million home and making it $2 million. We're actually bringing these cities out of a recession, because even at the end value of the prices we have on 2 units, it's not the price of build. A builder can't go in there and build a 2,000, 2,500 square foot duplex, let's say, for 420, 450 grand. No, they have to buy the lot at $175,000. Then they have to pay their, 20,000 or 15,000 on the development fees. So they're at over 200,000 before they crack ground. And most builders, I mean, if you're an independent builder and you're doing it yourself, you can get away with less, but they're $200 plus a square foot easily. So when you work in everything and then the HST on top of that, it's still going to cost them $500,000-600,000 plus in order to be able to build these homes. So we're pushing the market to allow more, eventually, hopefully more developers come in and really boost up the city. Because, the government tells everybody to own a home, right? And that was kind of the golden rule in the 90s. It was big in the States. But the problem in Canada and a lot of these submarkets, like I say, is these people have been told to buy a home. So they buy a home for $170,000 in the early 90s. Well, they've got no capital appreciation. So they got a nice deck, for $2,000 in the 90s that now costs them $20,000 to repair, but their home's still 190 grand. When you take out, their insurances, their property taxes and everything, these guys they've been better off renting for 20 years because there's been no stimulus there. So everything has gone up in terms of labor and lumber, but their prices haven't gone up, and they need that boost. I'm not trying to deal with places which are already above the price to build and bring it up. We're dealing with the lower end where we're bringing that lower end up and trying to get out of there. So when you do the math, I'm more of a philanthropist than a entrepreneur. But no, it's that's the way it is. I'll give you an example. We dealt in this one area of Facer where we did 7 properties there, and they're pretty much all duplexes and whatnot. And we sold 3 or 4 of them. And I had a neighbor come up to me and said, thank you so much. Like, I retired early. We got an extra 140 or 150,000 on our appraisal from the year before because we had a few comparables where we doubled the value. And all of my money went back into feeding the infrastructure. But I was looking at this and I was like, 200, there's 500 homes in that area, sold on 4 or 5 different roads there. If they all jumped up just 100,000, that's $50 million in capital. I didn't even make close to $1 million on those deals. So if you look at the economic value that we're doing in those submarkets, it's pretty cool. And I don't know if it's really recognized by some of the neighbors who will show up when we're doing committee of adjustments to try and not get us to, rebuild, a crapshoot into something nice for their area. But I know what we're doing, and the people who are involved with know what we're doing. And of course we are doing this for a profit. Of course we're doing this for something larger. But I think that it's pretty cool to see the impact that you can have in these areas when you're doing a lot of good work out there.
You had just glossed over your formula that you used. Do you want to go back and tell us, first of all, where'd you come up with it? And tell us what it is and then where you came up with it.
I mean, it was probably through reading. But initially I always kind of knew I just didn't have the funds to renovate. I was like, well, if you take a bad property that's, super cheap and you put some money into it and make it look nice. Now, I underestimated the cost of renovations when initially starting on what this stuff actually costs. So you got to be more, you got to know your costs. Like, we pick up properties all the time that are half renovated as people ran out of money. And it looks like sometimes after they demoed it, it's like, what were you expecting, right? Like, what were your funds going into this? But the model is pretty straightforward. I try to buy homes where after purchasing it, whatever my expected renovation cost on there is, say, you take a $200,000 home, and in order, and I have $100,000 reno budget just to keep the numbers super simple. Okay, well, that means I'm all in at $300,000 without getting into holding costs or anything like that. Well, I need at least a $400,000 appraisal to recoup my capital out of there and be able to do it again. It's an imperfect science, and you can't always do that. But I was always like, how do I own the asset and get all my money out? Like Robert Kiyosaki says, infinite returns. Once you have your money out, it's infinite returns, right? And you don't have to go on with that goal of getting all your money out. Most people don't go anywhere near that. They're just looking to passively invest. But if you can get the majority of it out, it's just going to allow you to build much faster. So, I mean, it does take practice and time, and you got to see the comparables, have an agent who's sending you the comparables so you know what you're going to get in that area. And again, you're dealing with appraisers who you don't always control, and so the values can sway from time to time. So it is an imperfect science, but the more comparables you have and the more, you know what you're doing on the renovation side, the more you can make that model work. So at the end of the day, it's kind of the poor man's way to get rich, if you will. But it's, that's what you're looking for, is how do I get these undervalued assets and after purchase price and renovations. And if you want to get granular, you definitely want to work in your insurance costs, your utilities and holding costs. But how do I buy this home and keep the asset and get all my money out as fast as possible to move on to the next.
Yeah, you have a lot of projects on the go at once. But
Yeah.
How do you manage all that? Who does what? What does that system look like?
But yeah, so we'll have
And in different
10
locations too, right? You have different locations on the go at different times. You're not in Sudbury at one time, and then St. Catharines a different time. They're ongoing, right?
Correct. Yeah, Sudbury is kind of a new addition this year. And again, I went there. So I'll start off saying why I went there. So to me, Realtor.ca is a really great tool. Obviously, it's only been around for the past like 15 years or so since the internet is, since we can do this, right? But before people were getting them in magazines, and to me, Realtor.ca really kind of controls the market for what people think prices should be going for. And for the model that I have, I want something with inventory. So if I were to go to a place like Timmins or other areas, that could be a great area to invest to start out. There's just not enough volume online for me to go in there and say, hey, I'm going to buy 40, 50, 60 properties over time there. So I like dealing with areas that have some volume to start at. And that's one of the reasons we went there. Plus the income is actually higher than St. Catharines and Sudbury. It's a better market than people think out there. So how do I operate them? So one of the things is building a really good network of sub-trades. We've been out there for years, and we spent a lot of time building up a good sub-trade network. Like I said, I've dabbled in hiring on a bunch of people in-house, which, it doesn't work for what I do. And it's the same reason builders don't do it as well too, because if they had everybody in-house, they'd probably go broke trying to manage them all. But when people are on set contracts, it's up to them to manage their sites. So having a really good network of sub-trades and a site coordinator to go there to make sure people are on time is very useful. So I work with a lot of, small business contractors, general contractors who can manage anywhere between 1 and 4 sites at a time. And then I have great relationships with some electrical companies and plumbing companies that can do the same. Now, electrical and plumbing, even for the scale of work we do, is a much faster timeline. These guys make a decent amount of money, and even to rough in a project is a couple days, call it a week at the most, even for a few units. But it generally takes a couple days for them to rough in a project, and then a couple days on completion. So really the biggest thing you want to focus on is the general contractors, making sure they're on time, they know what they're doing, and you're not getting screwed over by them. So the way we've been able to do it is we are working more on the management side. My hires and teams, like I have a full-time recruiter who actually works for a few of my companies, but he's also a JV partner as well too. And he's in charge of doing our hires and our contracts for our sub-trades. So we vet a lot of them. And the best thing, if you're doing it at that kind of scale, because we're doing 10, 15 sites at a time, let's say, is to make sure you're working with trustworthy people, and then have your management down pat, because you're really then managing the sub-trades to ensure that they're doing everything on time and that things are happening. And again, it's construction. Things are going to go wrong. Some people aren't going to show up. The small businesses, the GCs themselves might lose a contractor here and there that they employ. But when you're subbing a lot of this work out, you're able to control your costs. You know what you're spending on labor. You're not going to go over it. So the way we've been able to do it is really just by vetting a ton of different companies and then getting with guys who understand what we're doing and working with us. Because then instead of them running in, as a small business owner, them having to go to one site and maybe not getting paid or not getting along with the owner and chasing down jobs and quotes, we send them from site to site to site to site. When they're done one, they're on to the next, they're on to the next. And it builds a good relationship. It helps with the pricing on our end as well too. And say job security on their end as well. And it's relationship building on that end, really, in terms of operations. And then from our side now, we really, really try to focus on being the managers on that side, making sure, whether it's books are in order or, relationships with the sub-trades, legal documents, things like that, trying to bring it to a higher scale that's above my education level, which is why we have good people working with us. And I try to focus on the big picture and connecting those dots.
So are you duplexing in these areas? Is that what your main goal is?
Correct. Like I'm the reason it's not so much on the triplex, quadplexes this year in St. Catharines is just because the prices have gone up a little bit for completed projects that are nice for good passive investments. But for me, like, again, just the model, if I'm working with JVs, which I am exclusively now, I'm not going to sink them into something where they're going to have all their funds tied up. That just doesn't make sense. So we definitely are doing more duplexes in the St. Catharines area. Sudbury, it's a mix. Triplexes, quadplexes, it's kind of wherever the deal is, the unit price deals are there. And small commercial, we do. There's just more requirements on the commercial side. Sometimes it's a lot more difficult to refinance your capital out in a short period of time. Sometimes it might be a year. Then you're dealing with different tenant issues as well too, where you can't just kick out a bunch of people in an apartment building. And to be honest, we don't even do that where we are now. We work with the tenants if they're good. We'll offer them paid cash incentives to exit and sign N11s and do it properly. We're not looking to make anybody's life hard. Sometimes we take on difficult tenants where the value is that are, have little drug issues and things like that. So we work with their counselors to put them, somewhere that's, not our units, but somewhere that makes sense, or people who have not been paying rent for a long time. Have to get them evicted because they're taking advantage of the landlord who might not know what his next move is or how the court systems work for that. So we are this year focusing on 2 units, but I don't discriminate against others. It just happens to be where the value is at this time.
And that's probably a lot easier, especially when you're like going back to what you were talking about before with the people who run those projects for you, understanding what you're looking for, right? If you were to hire somebody different every single time, have to explain to them what it is that you're doing, what the requirements are, whatnot, on and on. So being able to streamline that, right? Important.
Yeah. And I'm working with a great engineer, a buddy of mine, Igor, who I've actually known for over 20 years. He's just awesome. And, he deals with the city quite a bit. And it's just really helped us like kind of hone things in and say, hey, how does this work? Because I'll send him a lot of, accepted offers we have and be like, hey, can we do anything with this? Right. And not to give all my secrets away, but I think another good thing is for people getting into it is when you're going conditional on an offer, an inspection clause is probably the best thing you can have, even better than financing, to be honest, because an inspection clause can be anything. And if you're looking at something and you're not quite sure in a competitive field, if you can convert it to a 2-unit or something else, that inspection clause gives you the time to send it out, obviously bring in an inspector, but to send it out to the engineer or whoever you might need to confirm whether or not you can do what you think you can do with it. And if you can't, then unfortunately you probably don't have a deal, right? But that's another good one in there. But it's really like I still don't know on some of them, like specifically. I know the rough values. I know what things are going to cost me based on square footage. But I'm like, hey, can we convert this? Do we need to go to committee of adjustments on this? Can we avoid it, or can we extend this to a single family and then create a second unit? So I still need help from people who are more educated in that field. And, there's a lot of engineers in any city who deal with that. I think that's, they're very useful if you find the right ones.
What do you think are some of the biggest mistakes that you've made at this point?
Hiring. Hiring has been a big mistake, but that's not just in-house hires. That can be sub-trades. That can be anybody. I find a lot of people try to do projects themselves at the beginning, or they work with a contractor. Oh, my buddy's a contractor. He can do this, right? And that can bring a lot of issues. I've done a really good job for the most part. I won't get into one, but for the most part, working with some friends in family. And that's been successful, but I wouldn't recommend it because, it can be tough. And then it kind of clouds things a little bit, especially when you have issues. You have to be on the same page with the people you do it with. And it's much easier to get your point across with people that you don't have an existing friendship relationship with or something closer than that, because, you know what you need and you're not going to sugarcoat it. I brought on people for years that it's like, I've avoided conversations just because I'm like, it's an awkward conversation to have, where I wouldn't have done that before. But when I see most new people starting is, they might look at something and be, I can do that. I know how to do a kitchen and I can do this. And they either try to do it themselves and underestimate how difficult that is. They don't do the research to know if what they're doing is even legal. They run out of funds. They hire the wrong subtrades. I wouldn't, unless you have a guy who's just done this before and you do know him in-house. I'm not saying that doesn't work to work with people that you know, but if you've not worked with them before, it's a different story. It's better to do your own research on that. Maybe check other projects that they've done before hiring them in to come in, and make sure that they can do it on timelines. I've seen disasters where people buy their first home and they bring in their buddy contractor. 9 months later, the project's still not done. They realize he hadn't done half this stuff before. So, or the price is way different, or two partners go in together and one of them is trying to build it himself. The other one wants to hire out, and they don't go through those steps because they haven't. There's a lot of new things that come on a first purchase. And now buddy's trying to build it with his dad. And it's like, guys, you spent a month on the kitchen, and guess what? We shouldn't have started the kitchen yet. We still got drywall to do. Why do we have the backsplash up? So there's so many mistakes that can be made. That's why I even recommend for people's first purchases, I don't even think they should be, for the most part, unless you're going in with someone super experienced, be dealing with repurposing or additions or anything like that, because that's a whole new head. You have one bad engineer. We've had that before. One bad engineer cost us, literally six figures, and we had to go in and get new drawings on a dozen projects because it turns out he wasn't an engineer. He was subbing his work out and had no clue what he was doing. And we get our permits in from the city, but then the city comes in and it's like, your measurements are wrong, your drawings are wrong, and you're like, what are you talking about? And this is over our head, it's over my head. So now I've just got to get the solution to get that in place. So that was a big learning experience there as well. And that wasn't even a friend of mine. That was just someone we found and thought it could work, and was a good talker, and obviously didn't pan out. So there's a ton of mistakes. I think starting slow and easy is the best. To give one more example, I have I know someone who started off and saw these projects, kind of knew real estate, but never really got into it, and decided to buy like a 20, 25 unit apartment building. Now he's a survivor, so he got through it. But I told him at the gate, I was like, listen, man, I've seen stuff in 2 units and single families that I've never seen before. When you get into something that large, you're going to have so many new things that you've never crossed before that it's almost like, it can be demotivating. If you have these problems come on, at the end of the day, business is all about problem solving. Everything's problem solving. You can problem solve your way out of almost anything but death. And when it comes to large apartment buildings and things like that, there's just so much new that if you're too inexperienced for it, it's going to hit you in the head, and it's going to take like a huge set of kahunas to be able to convince yourself that you can figure those problems out. So I'd say start slow and easy. Even if you think it's a single family home where you do the math, you might only cash flow a couple $100. Well, great. Start there and do a little bit of fixes and learn on that one. Or start with a legal duplex that, maybe you're not going to get all your money out. Don't go for the home run on your first try. It's honestly going to be my advice on that end.
Thanks. That makes a lot of sense. Good advice for some people. Couple more. Where do you see your business? Where a few years down the road, where are things going for you? It sounds like you're going pretty big with we're talking a lot about scaling and all that, and your focus with that. What's on the horizon for you coming up?
Yeah, correct. Thank you. By the way, but it's I want to have over $1 billion in holdings in Canada in these submarkets, and I think I'm going to do it. So right now, one of my focuses is trying to reach out there to different lenders and maybe larger equity firms and larger funds that understand what we're doing, the value that it's doing, and what we can do. Because it always sounds prettier from the outside. Look, I struggle with bills and payroll like anybody else on a weekly basis with companies, because I've dealt with a lot of issues we don't need to get into, but legal issues that things that just come at you when you're building. Now that you have a little bit of things going for you, everybody wants to come after you, and it's almost unavoidable at a certain point. So for this year, I want to finish off with about 150 to 170 homes, which is really double where I'm at right now. And because we're a working business, right now I've got about 40-50% of my inventory complete, and we're completing about 10% a month. So my goal is to continue to get better sub trades, more funding, so that we can continue to build this at scale and at a good rate. So by all means, what I'd like to build towards first is for myself and JVs, have 100 million in holdings over the next 6 to 7 months. And, if some things work out that we're working on from a funding perspective in a larger scale, I would like to have 250 million by the end of 2020. And I know that sounds like a lot, but at the same time, I've been doing this focused in this area for a long time. And there's, it obviously can't happen with my personal funds. That's, I don't have any of those. So it's this is problem solving at a larger level. And if you look at any business, it's no different when you're going for those things. Like I could say, hey, let go of staff and have what I have now and be like, okay, let's hang out and let's chill. But there's things I want to do that are much bigger and that are outside of real estate as well too. Plus I know the economic value that we can have at scale in these submarkets, and I really enjoy that. So for me, it's just continuing to scale and build something that's substantial and means something. And then be able to teach people how to do the same in some way. Obviously, my focus is completely on like what you guys do is amazing. You guys are giving information out to people who can come in and like you get 100 people that are doing 2 to 3 homes. Great. They've got 3-4 times the homes that I do. That's way more than I could do on a platform. And even if I'm at 1,000 homes, you look at just to do the math on it. Scale is everything. This is why, giving this advice out to people, I think is awesome because it just helps. It helps the areas, helps the market. Canada is the most underdeveloped, developed country in the entire world, right? And we need to build, and we need to develop, and we need to educate these people to get out there and get to it because there's always risk in things that you do, but we're in a great industry. We got low prices on homes outside of the GTA, and we have extremely low vacancy, which is something that is not common for anywhere in the world, including the United States. So those are the goals.
Cool. That's exciting. And
you're on fire.
Yeah. And it's a success is like an exponential, right? So you're gonna, like you talk about 6-7+ years of doing this and bunch of failing forward and challenges along the way. Like eventually you fight through enough of that, whatever you want to think of it as, learning experiences, and eventually you hit a point where you're like, I got this now, and you just go crazy, right? And it doesn't double it 100 times or 50 times at least in a matter of a short period of time. That's usually that's usually the way it goes. That's for this, looking back in a few years down the road, you look back and probably say, well, everyone will see the short view of it, and you'll see the 6-7+ years in the beginning that were a bit of a grind, and then all of a sudden it took off. So
it takes a lifetime of work to become an overnight success, right? So you'll find that almost in any industry, whether it's athletes, even entertainers. I've seen it all the time, and it's the same thing with any businesses too. I think Tesla still doesn't turn a profit, right? And how long they've been around, but people fail to see the PayPals and the things that he spent years on before that. So you're absolutely right. And that's what it is. And with that, it's going to come a bunch more problems. But if you're okay with problem solving and understand that's all a business is or growth is problem solving, you're going to kill it and you won't lose.
Let's get from you the number one piece of advice that you would give someone who's interested in at least even starting down the path of what you've done.
Yeah. Perseverance, like kind of what I just touched on there is like, you guys know, you started a podcast, you had 1 viewer, you know what I mean? Like, guarantee you're like, Mom, Dad, everybody come watch this, right? Like it starts and then it snowballs and then you have a big way up and then it kind of flattens. Like success is here to here to here to here to here. It's not this. And I think that's what discourages most people is they have a problem. And then instead of immediately fighting for the solution, they want to complain about that problem. And then, talk about that problem and why, how did this happen to me? Oh my God, I can sit here and do that all day long. Right. So it's anybody could. And if you persevere and just know that if you're getting into something, there's going to be some shit that comes up that's going to be troubling and you're going to have to problem solve your way out of it. So perseverance, I'd say, is the biggest thing. And starting small, honestly, because you can get through a first project quickly. And if you can't get through it quickly, well, how do you think you're going to do on the big one? Right. So start small to ease your way into it. So your learning curves are not as discouraging, and that will help you on the perseverance side.
Okay, great. Well, I mean, man, you have told us a lot of stuff.
Yeah.
So I really appreciate all the info you've shared today. And for those out there that want to get in touch with you, how can they do that?
Well, I have an Instagram, Robby W. Clark, ROBBY WCLARK, where I post a lot of videos and content on businesses and real estate in general. So that's one. I'm not too active with the YouTube channel or anything like that. I've got to carve out more time for that. I'm pretty focused on building what I'm doing now, and then maybe creating a larger platform from there. You can reach out to me on. I have Sid Developments. If you go to that site, you can contact us there. Redline Renovations, which is my construction company, though I don't really do any retail work there. It's really just for our own in-house stuff. You can contact us in the contact page. And then my personal email, if you want to reach out, this might be dangerous, but Robby, ROBBYWCLARK @gmail.com. I check almost every email that comes in there. I get about 100 emails a day right now. So, but I'm always, I'm happy to help and talk to people where they need some learning. And yeah, those are probably the best ways to reach out to me. And like I said, most active on Instagram out of any social platform. So.
Great. Well,
probably
I just signed up on it. So,
man, awesome. Thank you. Thank you.
you got another new follower.
Awesome. Thank you.
Sandy, how can people get in touch with you?
289-389-6846 or info@McKayRealtyNetwork.com.
You can reach me at info@breakthroughreipodcast.ca. There was just too many phone numbers there. They'll get ours mixed up, you know?
Yeah.
Info@breakthroughreipodcast.ca. Thanks for listening, everybody. Appreciate it. And we'll see you next time.
Awesome, guys. Thank you so much.